Hello and welcome to another update video about Bitcoin and Cardano. We can see there's a little bit of a sell-off going on, nothing too crazy, but I know some people are panicking already, so don't worry. It's nothing that is changing here the course of action at the moment. There's just a normal retracement in my view, nothing nothing too exciting. And Bitcoin, to be honest, is consolidating at the moment anyway. We've been talking about that in the previous video. Before we start though with Bitcoin, just really wanted to show you, because there were a few questions about my Elliott Wave count for Bitcoin, and what we see here, people wanted to see when it started with that wave 1 that I have here on the chart. And that wave 1 started here at around $4,000 back in March 2020. And then you can clearly see here a wave 1, a wave 2, a wave 3, a wave 4, and then you see here a wave 5 to the upside, okay? And this is also forming a larger wave 1. And this down here in this target area will be the wave 2. And if we measure from the low of the wave 1, so the $4,000 level, oops, just need to zoom, go a bit lower. From the low of the, well, which is basically here the 4,000, I crudely draw this now, just to not waste too much time. But from around 4,000, we go all the way up to the high of the wave 5. And then you can actually see here the ideal target level for that retracement, which will be here the 0.618 fib level at around 27K. That is lying here in my target area. My target area for this wave C correction or the wave 2 correction, which is basically the same thing. It's just that this ABC that we've been doing is part of the wave 2 correction that we are coming down from. It starts below the wave A basically for me, and I go down to 20K, which is the top of the last Bitcoin bull cycle. Theoretically, as per the Elliott Waves here, the retracement level for a wave 2 could go down, in my view, even here to the 0.786 at 17K. In an extreme case, it could even go down here to 11K at the 0.887 fib level. This is basically where Cardano is at the moment. Yeah, so it's not that it can't go lower, it is just what I think is likely and is not likely. And I also have to base it on what did Bitcoin do in the past. And so far, Bitcoin has never gone below the high of the previous bull run. Yeah, so that is what I just want to highlight here. Another thing, people have asked me in previous videos why I don't use a log scale so often. Personally, you will see that I don't use a log scale often, and I don't personally like the log scale. There is no right or wrong here, but I personally don't like it. I don't like to use it for Elliott Wave analysis. I know a lot of YouTubers and analysts do it as well, and it's also recommended on some websites, but I personally don't do it. I don't think it is of much use for the Elliott Wave analysis. I think you can come to wrong conclusions by using the log scale generally, and the problem, especially with the Elliott Waves, is that a lot in the analysis of Elliott Waves is about seeing what's going on. You want to get an idea of the ratios, and if you go to the log scale, everything's flattened out. You don't see the ratios anymore, and that is really what I think is so valuable on the arithmetic chart, to actually see those ratios. You want to see how long is a wave 3. You want to see those ratios, how they fit together. And if you have experience in Elliott Wave analysis, then you can make out by looking at a chart, you can see those ratios, and it is much more easy for you to really come to the right conclusions. But if you have a log scale, which might be easier for some people, yeah, it might provide a better overview, but a lot of these ratios are lost in the log scale because everything is flattened out. That's why I don't really like to use it. I really try to avoid it. Sometimes I use it, but very, very rarely, and I try not to use it if I don't have to. Sometimes in rare cases it can be useful, but whenever it's possible I try to avoid it, and that is why I usually use the arithmetic chart, which I think provides a better image of the Bitcoin chart and generally for Elliott Wave analysis anyway. I use generally, as with every analysis, especially with the Elliott Waves, there is a historical rule book, and this was then once more by two people here sort of a little bit changed or further developed for the modern world. That book is Elliott Wave Principle by Frost and Prechter, and this is in my view one of the best books that there is, and I really in my analysis stick to this historical, or not historical, but the original and conservative way to interpret the Elliott Wave analysis. And there are other people who just break the rules. That's what they do, and it might then become more simple, and you might come to outcomes that more people like. But in the end, I really try to stick to this book here, which I have in my hand actually right at the moment, which you don't see, but you know, that is why I try to really stick to this original way of using the Elliott Waves, and in my view it's working out so far. So let's see. And of course, as with every analysis method, people who interpret Elliott Waves and use it as a tool come to different conclusions. You know, you have different people coming to different conclusions. Usually there are different alternatives anyway, but and I always try to make you aware of this. So let's take a look at what could happen here more imminently for Bitcoin, and we go to the hourly chart because people are panicking a little bit. So what I sent to all channel members earlier today was that exactly when we bounced off here, that there could be a little bit of a sell-off, and this is also what happened here, you know, in after that. So everybody who saw that on Telegram will know that I think, I can't remember, was it at 43.7? That is when I told you that there could be a little bit of a sell-off. There was a clear reaction here to the fib level, and since then we have also dropped down. However, we're holding here around 42.5, you know. We have lost the 42.7, which was here one of the key levels here, that high. Yeah, we had a bit of a high here, and let me take out the red circle. But there is another key support level here at 42.2. Yeah, this red line here. And then we've got, after that, we've got here 41.6 and we've got 40.5. These are the key support levels. I told you though that what we could see here is a cup and a handle. Now, how big that handle becomes, I don't know. If it goes down too far, it might not be a relevant cup and handle, because you normally want the handle not to go lower than 50% of the depth of the cup. So if we just draw here this just crudely here, so this could be the cup, all right, and you don't really want the handle to go lower here than the 42 level maybe, right? But that is what could be playing out here still, so it's still relevant. That is obviously something like an ascending triangle that would be forming here, or yeah, just a cup and handle, you know, which if that breaks out here above this level at 44k, really could push us higher. However, the way we come down here is quite strong, admittedly, but doesn't matter. We came down here quite strong as well, and then basically found support. So in the end, you know, nobody knows really what's going to happen. The cup and handle is certainly a possibility, which is still at play here, hasn't been invalidated at all, and that is what I mentioned in my previous video. I also mentioned that we could really be moving up here, and just that dip here does not mean we are not coming up here. It is just a temporary consolidation that I talked about, could be coming, and that I made you aware earlier. Now, why did the price find here a retracement now, or didn't come through? Now, my interpretation of this is again retracements, Elliott waves, and fib levels. So what we had here was wave 3. Okay, so what I show you is we take the height or the length of that wave 3 here, from the beginning of the wave 3 to the wave 3, and what we can see here is my target area for this wave 4 that I gave you is sitting between the 0.382 fib level at 47.1 and 49.5, the 0.5 fib level. Now, for a wave 4 retracement, it is already sufficient actually to go to the 0.214 fib level. So probably what I should have given you is this target area. Admittedly, it's quite a large target area. The ideal level would be the 0.382, which is why I had it here on the charts like that. But by applying the Elliott Wave rules, and just purely by applying the rules for that wave 4 retracement, this retracement level would have been sufficient. Yeah, so it has basically done what it should do in a wave 4. It has hit that retracement level and could theoretically now move into the wave 5. Now, does it do that? I can't tell you. I don't know. We need to see. Yeah, but you know what my scenario is anyway, that we're going to land here. Independent if we're going up a little bit higher here, or even if we go into this area and then go down. But my view is we are going to go down eventually here in this wave 5 move or that wave C move, which is all part of the same thing. this is too early to really come to any conclusions. Yes, we've seen here quite a significant reaction, which doesn't mean though that we could find support here at around 42k and then move up here further into the target area and possibly to that ideal level at 47.1k, which is here the 0.382 fib level, or maybe even up to 49.5. If we move above 49.5, then this alternative scenario gets at play, which is then this wave B scenario that I talked about as well. And this area is sitting between round about 54.4 and 62.7k. Overall, after then we go into this area in the worst, well, in the most bullish case, yeah, we could then see the sell-off. Obviously, the earlier we sell off, the better from a timing perspective, because then we could turn around much earlier as well, again to the upside. Because what we see here, as you've seen in my overview here, that we are then in a wave 2 currently, and after the wave 2, what do you get? You get your wave 3. Now a wave 3 has normally this kind of a rocket start, and we could then really go here all the way up, yeah, at least to 100k. I would be disappointed with 100k. I think we could even see here more. Let me just adjust that. What we've seen in the past with Bitcoin, it sometimes came up to the 3.618 fib extension. Yeah, so this is obviously, it's always important also with different cryptos and generally markets to take a look at what did the chart do earlier before in terms of fib levels and extensions. And 225,000 would certainly be an extension of that wave 3, or even the wave 5, which comes after that. That would certainly be a possibility here for a certain possible price target in the next bull run then to the upside. And overall, yeah. And people, you know, I can't give you any advice about selling or buying. Of course, you know, I have my buy orders and I tell you my sell orders. You can do with them what you want here on Discord. They should really help to keep a calm attitude and a calm mind. In my view, you know, I'm just not the kind of person who would try to sell here and buy back here. It just doesn't work. You know, it just doesn't work. Anybody who's telling you it works, you know, it is, first of all, hugely time consuming. It is very stressful, and oftentimes it's not even more profitable than just longer term swing trading or even just hodling. And I mean, with this channel here, I hope either to give you an understanding of how you can do proper swing trading, you know, come to your own conclusions, understand the charts, and most importantly, even if you're just a hodler, I know there are a lot of viewers who are just hodling, very importantly, just to keep a calm mind and attitude, and just to understand what happens in the chart and what the chart or what the price in the market could do in a certain environment. Now, this has taken far too long already, so let's take a look at Cardano. Sorry about that for everybody who's only here for Cardano. It took a while, I know. Looking here at Cardano is obviously here still fighting for survival, and as we speak, it's dropping a little bit further, 123 now. And what we've seen here in the last few days is a possible move to the upside, but as we've seen it unfortunately so often with Cardano, it was just another fake out, and unfortunately you can't ever really identify a fake out really beforehand. You know, we saw here the price breakout of this descending wedge, which looked very interesting here, came up all the way above 130, but now we've dropped back into the wedge here again. And I mean, this is what I showed you earlier today, right? This was when my previous update here, I showed you this move up after we broke out of this descending wedge, as expected, pretty much to the upside, because usually a bullish pattern. We then formed this smaller bull flag, yeah, with a descending wedge again. Showed you that this could be some sort of a bull flag, but yeah, it did break out, but it was a fake out in this case. And now we're even breaking here currently to the downside. I mean, we haven't broken it yet, but we might be, and this is related, I think, to Bitcoin's drop now to 42.3 as we're speaking. So this is just what the price is doing, currently dropping. We're getting here on the 1 hour chart close to the oversold range, below 30 on the RSI. And what we want to understand here, and again, it was, again, as I said, a very, very important resistance level here. This 50 line on the RSI has been so painful for every Cardano holder. It has been at play since September, and historically it's been important for Cardano as well, but really since September we feel it. The price has stayed consistently below the 50 line on the RSI, and what I always say with indicators, they are very, very objective. Indicators, oscillators, they can be very objective, especially the RSI. You know, you can draw trend lines in a chart and do all sorts of things. Oftentimes it is subjective, but the RSI is a very objective indicator in my view. You've got here your clear support and resistance lines here on the 50, for example, the 50 line on the RSI. You can see that it consistently did hold throughout the entire correction below the 50 line, and you could identify here a real resistance, and we then broke it here once on the 7th of November. In the end it was a fake out, but you can see what the price did then. It did really shoot up. It was a fake out. It then shot up again here around Christmas time, and it also did shoot up the price, but again another fake out, and this time the price couldn't even, or the RSI couldn't even get above the 50 line. So it doesn't show very bullish here anyway for Cardano. Cardano is sort of fighting for survival above the $1 mark, around the 0.887 fib level at the moment. And yeah, if it doesn't hold the dollar, to be honest, the next chance it would have then to reverse to the upside would be around 65 cents. I think if we drop below $1, we very quickly unlock prices all the way down to 65 cents, and then the price has the next opportunity to do a big turnaround. And to be honest, what we've seen here is how far altcoins can come down in a retracement, and we can see it still play out for many other coins at the moment as well. So overall, still in this downtrend. What we saw here with Bitcoin is obviously also this downtrend. What you see here in this move up is nothing else than a retracement. Yeah, it's a correction. This move up is a correction. That's also the language within the Elliott Waves here. You are basically here in your impulse down, and you have your correction to the upside in this case, and the next move will be an impulse down. If this is the scenario with this 1, 2, 3, 4, 5 down, and you currently have completed the wave 3, you're now in this wave 4. Maybe it's already completed, as I said, and if that is the case, and we might get back into this channel here, yeah, to the downside, then this could really accelerate our move down of that wave 2. And as soon as you have completed that wave 2, you can see the turnaround. Now, how long, also for Cardano, obviously, how long will that, people call it a bear market. I don't really like the name bear market, because in the end, there is, from an Elliott Wave perspective, there is no real bear market. You can't really call anything a bear market. It is one of these terms I just don't really like. I try to avoid it, because in the end, if everything is just a correction, you know, the price always has to go up, and these prices that go down, or these periods where the prices go down, they are nothing else than a correction, because if the price wasn't going up, then it would just, you know, that asset or whatever you are, it would just die over time, because the price can't just go down. What you typically see is just corrections of an impulse to the upside, and this is typically what happens. And yeah, you know, and we just have to live with it and keep calm in these times. That is the only recommendation I can only make to you. And yeah, it's exciting times, and I think very soon we have a chance to buy much lower prices for everybody who is obviously interested. No financial advice, but I will certainly buy more at lower prices, because I'm very certain that after this correction, this deep correction of a wave 2, the prices will go up like a rocket in a wave 3. Alright, so hopefully you liked the update about Bitcoin and Cardano. If you did, please smash the like button and subscribe. And if you really like the content, maybe consider to join as a channel member. And you can find a link to that, to my website here in the video description. And also you could join on YouTube if you're interested. And as a channel member, you can get access to a live stream per week, and also my Telegram and Discord groups. Thanks a lot for watching. Bye-bye.